When it comes to the investment side, where we're trying to push a lot of AI tools, there's quite a bit of resistance. The answer is, unfortunately, investment is a data game. AI is made to process large volume of data, so it's going to be better than you. Over the next 2 or 3 years, banks won't be able to keep up. It gives us an extra edge.
Why do these ultra-high net worth clients choose family office rather than private bank?
Banks are very, very restricted in what they're allowed to offer. They haven't kept pace with the investment offering that clients really want. When that one trusted person leaves and you get somebody new every 6 months, it's not a nice experience. The relationship only gets you so far. Asia, the banks still struggle, surprisingly. European banks have got it, that's why the EM segment is much bigger. Most people forget the only purpose we're here is to make clients money. That is what we should stand for. You are 45 years old, these are your kids, you should place X amount in a discretionary portfolio, Y amount in a hedge fund.
Comparing to a tailored suit, I can text my tailor in Bangkok anytime. He knows exactly what I want. That's the same with investment. Welcome to the Pulse Check podcast. Dominic Schacher with me. Welcome and thank you for making your time.
Thank you for having me. Happy to be here.
Yeah, and we are here in Singapore. I've traveled this week, normally out of Hong Kong. You're also a global citizen. You sit here in Singapore. I've been in Hong Kong many times, but you, same as me, come from Europe. I'm excited to learn your background and your story, of course. But before we dive right in, may I ask you, what makes you you?
What makes me me? Difficult question, but I think simplest way to put it, I think I like to try new things and I'm very determined. So whether that's in private life or business, I think when I set my mind to something and I want to try out something new, I'll go at it until it's done. And that's proven for me actually quite a good recipe, right, to get further in life overall.
Yeah, and that's the right mindset, especially when you come to Asia in a fast-growing market. You need to get things done, and we both have a Swiss background. I just learned that you actually grew up in almost the same village, but close by, and both of us now in Asia since a while. You have an exciting background. You started in big, well-known brand private banks in Liechtenstein, and then you came to Singapore, and now you're actually in a managing partner, board member position at Aument Capital, in probably as big of a business as in the previous private banks, but probably a smaller organization as an external asset manager. And I would love to hear a bit your story, and maybe you can also explain to the audience the setup and also how the industry is doing, how it's also compared to a private banking setup.
Sure. I'm happy to kind of go through my background. I think it's quite unique, kind of where I come from. So I always wanted to be in corporate finance, M&A, investment banking, maybe trading. That was always a big dream since maybe the age of 10, 11, 12. Not astronaut, but investment banker was the roadmap for me. So I went and then studied, always geared towards, going into that investment banking career. I studied in the UK, did my master's in finance. And funny enough, when I was looking for my first internship, that was 2009. So the mortgage-backed security crisis.
Exactly.
So unsurprisingly, didn't find an internship back then in investment banking. So then decided, doing my bachelor's, let me give it another year and I'll do a master's afterwards because, you can't really find a job. So I look for a new job in 2010, 2011. So finished
which was much better.
Which was exactly the crisis, the PIGS crisis, Italy, Greece, Portugal. So also was quite difficult to find a job. And eventually I got an offer to go into investment banking in Frankfurt. And at the same time, I got an offer to go into private banking in Liechtenstein. And for some reason at the time, I decided, I think sounds more interesting somehow. Right? Like spreadsheets, investment banking, long hours, or the private banking, like wine and dine kind of, setup. Let me give that a try. So I went and did that and ended up on the international desk looking after mainly Russian clients and res non-dom. So got to travel to Russia as a 22-year-old private banker, which was really cool. Like it really also steep learning curve, I think, for me, coming from more of an investment banking trimmed like numbers business to more of a personal business. Because again, private banking is all about the relationships, right? The products are almost, the bank and the products are almost secondary. I did that for 3.5 years. And then I got quite lucky in that the Singapore branch was looking for a person from head office who could speak English and kind of help them solve not the mess, but a little bit like, they were only here for a couple of years. The stuff wasn't working very well with head office. See if I wanted to go down for 2 years, but they didn't have a spot in private banking, but they had one on the external asset management desk. So I was like, hey, why not give that a try? I've never done that. So I came out to Asia and I was meant to stay for 2 years. So that was 2015. And then did that for 1.5 years or 2 years. And then my entire team moved to another bank. I think, I'm good to name banks here, right? On the podcast.
Yeah, of course.
That was Bank Safra Sarazin. So I got a chance to move over there. Still on the asset management desk or external asset management desk. And then again, got very fortunate in that one of my clients at the time wanted to hire me to help them run their business in Singapore. So I did that for, I think, 2.5 years, and then decided, hey, I think I'm old enough, I feel comfortable enough with what I'm doing that I think I can kind of set up my own multifamily office, because I discovered, or in my opinion, like a very specific niche that was being underserved here, I think, in Southeast Asia and Europe as well, but I think especially here. So at the time I decided to found my own company, Aument Capital Partner, with my business partner, Sheng Yong. That was 2020, end of 2022, beginning of 2023. And since then, we've grown a lot. So not looking back, it's been a good decision.
And there was also in the news a big merger last year, right? Which is also interesting to understand. So these multifamily offices, external asset managers, at some point to scale, they end up merging if it works well.
If it works, right? So for us, that was a very interesting opportunity, I think, for both sides. So my company at the time, Aument Capital, was really geared towards entrepreneurs. So we say net worth between $20 to maybe $150 million each. That was kind of our core clientele, really offering them the full family office. So that means the wealth management, cash recon, loans, corporate services, tax, lawyers, private equity, private debt management, like really the full service at a scale where most family offices can't do it, right? If you're a traditional family office client, you must have $300, $400, maybe $500 million. Then you can kind of run your own setup. Multifamily offices struggle to replicate the same setup. So we were fortunate enough to start in 2023, where there's an abundance of technology around. So for me, it was like we can service these clients at scale, if you will, just due to the technology offerings that we have. So we built that business, started scaling really fast, got around 130 clients maybe in about 2 years. Obviously not, some of them were smaller clients on the investment side as well. And then we started speaking with Lumen, which is a more traditional wealth manager. So they were focused mainly on the liquid side, plus hedge funds, versus us, which were more on the discretionary side, plus private equity and private debt. So it gave us a really good opportunity to merge two wealth businesses to kind of offer our clients the full suite. And we've kept the Aument Capital license to now purely focus on just private equity and private debt, to also a little bit maybe segregate the risk. I think wealth business, private equity business is quite different. Again, in the news at the moment, all the private debt issues, which again, in my opinion, aren't issues, right? I think it's more maybe media driven, but I think, so we decided to split the business, keep the wealth business inside Lumen and keep the private equity business within Aument Capital.
Yeah, before we go further into details there, because I'm sure our audience really appreciates your depth of knowledge in in all the areas of wealth management and private equity. But before that, you're an entrepreneur. So you made a tough decision at some point to leave one of the big brands, of course, the likes of Safra Sarasin, well-known Swiss oriented brand, of course, in Asia a bit smaller, but really top-notch quality. And then you step out and you build something completely new. And I know it, of course, myself, as I'm an entrepreneur. But would you ever say you regret that move?
No, definitely not. It's got a lot of downsides, I think, but for me, so many upsides, right? I think being able to make your own decisions is a big thing for me. Not being bogged down by politics or red tape, and just being able to actually do business, onboard clients, onboard new products. I think for me that outweighs all the long hours and the weekend work and missing some family time and things like that.
Absolutely, yeah. Then let's deep dive now into the multifamily offices business, external asset managers, for sure interesting for our audience. We as Simpulse, we also consult many of the big private banks, and we've been in the industry with also the EM business for a while. I personally worked with some of the EM desks in Europe first. It was actually, as you were talking about technology, I had to once visit in the UK in various places, many of these family offices, to install through Citrix a network that they could then access the custodian bank system to enter their trades and so on. It was very old school back then. 15 years later, a lot of things have changed, including, of course, also AI, which we may touch on afterwards. But first of all, as you said, a highly trust-focused business with relationship manager with, in your case also, as you said, a lot of entrepreneurs you work with. So why do you think these ultra-high net worth clients, entrepreneurs choose external asset manager or multifamily office setup rather than a big private bank, or maybe also both, maybe the mix? So what's the rationale?
I think, especially in Asia, there's a lot of push and pull, if you will, as a client. So, when a banker tends to leave a bank to join an EAM, it's usually quite straightforward to them to convince to continue working with them. Again, it's a trust-based business. Yeah. You as a family, you've had your banker for 5 years, 10 years at whatever bank you're at. And then they leave. You don't really want somebody new to come in to meddle with the finances. So there's a lot of pull factor, if you will, from like the banker side. I think on the other side, there's a lot of push factors in that the banks really they haven't kept pace with the investment offering that clients really want. I think, nowadays families have gotten a lot more sophisticated in terms of what they want. Banks are very, very restricted in what they're allowed to offer. So some of that is, in-house kind of red tape that, they just have their specific way of doing things. So you can only offer the bonds or the equities, or you can't offer certain funds. Some of it is obviously regulator driven, kind of what the bank can offer. So I think having both the more limited offering within a bank, and there are some exceptions, but in general, banks have very, very limited offerings, together with your trusted counterparty being the banker leaving, I think makes these, makes our industry grow pretty significantly overall, at least in terms of number of clients. But also I think, for any client, when that one trusted person leaves and you get somebody new every 6 months, every 12 months, every 18 months, it's not a nice experience, right? So I think as a client being with an EAM, there's zero downside to you as a client because you still keep your existing custodian, or usually you do. You still have access to all the financing, all the trades, custody that you want from the bank. But now you have that one person, you keep on talking to the same person for the next, decade or 2 decades. I think is kind of what, for me, makes the EAM bank client kind of set up quite special because it benefits everybody. And I think it's if you look at Europe versus Asia now, European banks understand that. They're like, you know what, it makes sense for me to have a family office or an EAM in between me and the client. We share the workload in that, like, okay, we do custody, execution, loans, mortgages, whatever it might be. The EAM handles the client, handles the relationship, handles the wine and dining, handles all the other problems. And the client kind of, has best of both worlds. The European banks have got it. That's why also the EAM segment is much bigger.
Mm.
I think Asia, the banks still struggle, surprisingly. Even if you look at some of the big banks, they don't get the EAM concept. Like the Swiss banks obviously do, right? But even there's more restrictions than you would have in Europe. Then the big banks, they haven't gotten it yet, kind of what an EAM is and kind of how it could benefit them. They always see it as they're stealing my client.
Yeah,
in fact, actually, client's still there, right? I think
exactly. Yeah, in terms of course, the platform, there's still the custodian bank, as you rightfully said. Sometimes also that's why the term independent asset manager rather than EM is formed in some markets, because basically it's just like you still have the RM is just independent. He runs his setup and takes also some of the entrepreneurial risk with him. And but you still then book through the custodian bank. Now, it sounds to me also like it's more bespoke, more sophisticated, as you said, in terms of product offering. What does that mean in terms of scaling your business? As if, of course, it's more ultra high net worth, but it's more complex. How can you scale that?
Yeah, it's a good question. So there's a couple of different things when you look at kind of how you manage a client, right? I think, funny enough, the larger clients, the multifamily office clients are easier to service, even though they have very bespoke requirements, than usually the smaller clients that want more of an advisory-based relationship. So to maybe put a distinction, in our business, as an independent asset manager, you can either manage the client's funds on an advisory basis. So advisory basis just means usually you have a chat with a client before you make any amendments to the portfolio, or you can run it on a discretionary basis where you just make all the calls as the EM within the risk parameters that the client has set with you. At Aument, it used to be 100% discretionary. So if you look at banks, for example, the discretionary portfolio penetration is usually 3 to 4% maybe in Asia.
In Asia, yeah.
EAMs, maybe you're looking at 10 to 20%. So we were always at 100%.
Wow.
It was, this is what you get. If you want something bespoke that, we maybe are not the best at, let's say you want a specific US technology growth mandate, focus on whatever it might be, we weren't the best to execute on that. So we would give it to another manager and then just take over a supervisory role. Obviously, that's a very binary way of kind of doing business, but it let us scale extremely well. Performance was extremely good for all the clients, extremely consistent, because it was us taking the decisions. There was no time lag in trying to call a client. Let's put risk on, let's take risk off. Maybe we should sell this bond or sell that bond, because it was all in our hands. Performance was also, very, very good and very, very standardized across portfolios. Now that we're obviously much larger, there's a bigger piece of advisory business in there, right? Which makes it quite difficult to scale, I think, for us, because again, you've got to talk to the client, you've got to have specific proposals. Every client wants a little bit of something different. So for us, I think that's where AI will come in, quite heavily again. So I think I got lucky when I started the business back then. I think I got extremely lucky again now with where AI is at to kind of help us give a more bespoke and a better client experience in the larger Lumen group now than maybe what we did on Aument's side, because we can be a lot more bespoke at scale, given kind of the efficiencies that we're gaining nowadays with all kinds of AI tools.
Yeah, that's also an area where we collaborate a bit. If I
Correct.
mentioned that with Simples 8 and Lumen. And agree with you. We were also lucky because the technology arm of Simpos 8 only started officially around 5 years ago. And the platform we built is also fully now agentic AI ready, as it was just built the last few years and not 20, 30 years ago, as many of these asset management, private banking platforms that are highly sophisticated, but of course more monolithical and not fully ready. Maybe I want to double click quickly in terms of scaling while still having, of course, as you're also Swiss, the same quality mindset, especially also when you grow with relationship managers that come from the industry. And of course, as you said, there's many private banks that also operate a bit different. And how do you ensure that also the team, not just from a platform product perspective, but from a teaming, that they all follow the standard that you want to see in a Aument Capital?
I think that's, I'd say quite difficult, and it develops over time. So, I think the official merge of the wealth units was, I think, October of last year. We're now 6 months in. Again, to say Aument was much smaller than Lumen, right, in terms of both assets and staff. Yeah, also quite a bit smaller on the Aument side. So there's a lot of existing culture on the Lumen side that we also don't want to, I think, change too much. Right? I think they've built an incredible business over the last 10, 15 years. We have a much younger team coming in. So it's more about like, where can we help to improve existing things? But back to kind of what I was saying originally, the clients are with the bankers, right? So if the banker's not happy with how we kind of change things at Lumen, if the banker were to leave Lumen, there's 1,000 other EAMs out there. So like, why join us, right? So one, we're trying to give them all the tools, in terms of technology kind of to make their lives easier, but also investment tools to kind of make them have a better choice, a higher quality choice of kind of what they invest in. But essentially it's up to them in the end, right? Do they and their clients want the hedge funds that we have, the private equity that we have, the discretionary? If the answer is no, then so be it. So it's trying to kind of manage by offering solutions, offering best-in-class solutions. But in the end, they have to decide themselves whether they would like to kind of take those solutions. Again, where we can push a lot is on the operations and administration side of things, because there it's one platform, it's our choice, kind of what we do. So there we can really say, look, this is what we think is best in class to kind of do KYC, do portfolio proposals, do reviews, do transaction monitoring, all the things that we have to do. So there, like, we can push a lot with tools to kind of make sure that everybody has the same standard.
Yeah, and that, I think you have a big advantage. You don't have all the legacy, as you said before, compared to the big banks. And with AI, everything is moving so fast right now. Yeah. Probably when our audience listens to the podcast, things have changed again dramatically. And so would you say that your bankers, they're also very open to all new innovative ways on working?
Yes and no. So I think it depends a little bit on the age of the banker, also to be a little bit ageist, maybe. When it comes to efficiency tools, yes. If they have to do less work for, let's say, KYC, or less work for transaction monitoring, or less work for client onboarding, they're all on board, right? Because everybody hates doing admin work. There, yes. When it comes to the investment side, where we're trying to push a lot of AI tools just to help like build a portfolio, and we can get into details a little bit, kind of what we're doing there, there's quite a bit of resistance, right? Yep. Which is, again, like, I think it's not unsurprising. Like, people, when it comes to investment proposals, they have decades of experience. So how can a little tool do something better than me?
Yeah,
right?
Exactly.
The answer is, unfortunately, investment is a data game.
Yeah.
AI is made to process large volume of data and text. So it's going to be better than you, right? I think for me, the roles of investment advisors and bankers, I think fundamentally changes over the next 2 or 3 years or 5 years, maybe a little bit longer because banks are quite slow to adopt stuff. But I think, the game has changed. We're trying to be at the forefront of this because we're, again, quite lucky that we're younger, we're smaller. Banks won't be able to keep up. So I think it gives us an extra edge and a client, an extra reason to be with us. As a simple example, when we had the Middle East conflict, for somebody to manually run their portfolios, what do I have the exposure? Which bonds do I have? Which company might be linked to UAE, to this, to that? Which company has a big project, maybe that's, going to be make or break for them? You can't analyze that. If you run a portfolio through AI and try and make all the links, you can get an answer within minutes, right? But not only for one client, but for all your clients. I think that's kind of where our advantage lies, to kind of utilize stuff like that to give clients better service, better reporting, more timely reporting, better recommendations, hopefully more accurate recommendations.
Yeah, just get more data points. I had my own experience a few weeks ago over long Eastern weekend. I myself with Claude Code, I quickly used an open source GitHub repository to do full equity research with 12 agents for analysts that, for example, do sentiment analysis of all the social media platforms out there. If you take a stock like Meta, okay, what are people talking about in all these social media platforms? Again, something with so many data points, you cannot just do easily yourself. The second thing was, for example, also looking at, of course, Yahoo Finance and do the whole chart analysis for you. And then you had two more agents that were basically doing the bear and the bull case and then actually debating. And again, you could say, okay, there maybe were a few wrong statements or whatever, but it doesn't matter because the additional data points you get from these agents then arguing is already something, if you have to do it yourself, is a lot of effort. And then you had the risk agent that came in who looked at it from a pure risk perspective, of course, with the war or whatever the situation might be. For me, this was an amazing learning experience of how far we already got. And again, in 6 months from now or in a year, it will be even much, much further. And I believe the setups, the companies such as yourselves, where you're open to it, and that's probably more a mindset shift rather than just a technology problem, will then be able to adopt. And that's where I see tremendous opportunities, especially in a highly complex, high-touch environment where it's so built on trust. So, of course, you may not want to immediately expose some of these capabilities to the end client, and maybe he doesn't understand and gets frustrated. You want to have, of course, your trusted relationship manager working with the client, but he is empowered and has all that knowledge and experience. I fully see that, and I believe you're on an amazing journey
Hopefully.
on this.
It is an investment, both in time and money. But for me, it's quite clear where the world's heading, right? So.
Yeah, and that's where I probably also would love to go next, right? The bit of the future. And again, the future, maybe in the past we would have said in 5 to 10 years from now maybe
next week, who knows?
Yeah, exactly. But the future of building kind of the next generation wealth firm, I mean, with agentic AI and all the complexities. So again, maybe the first part of the question is, what do you want to stand for as Lumen? Or also Aument Capital, and then how do you see also partnerships such as also together with Symposate, if I maybe ask how that could help also for what you want to stand for?
Yeah, look, I think most people forget for some reason, but like we are the only purpose we're here is to make clients money. Like that is what we should stand for, right? So for me, it's how do we do that the best way for the clients, but also obviously the most efficient way for us. Because again, in the end, I'm still running a business, so we still have to make a profit in the end. So like how do you kind of combine those two things, right? So for me, it's really how can we offer maybe more standardized solutions to clients, right, in terms of investment offerings. So again, for Lumen, we have an incredible discretionary offerings. I think we're always top quartile. The team around that is extremely good. We have one of the most amazing hedge fund offering, which I've been running for a long time. Our private equity, private debt business for us is very unique as well. Again, there we focus mainly on deal by deal. So we don't run to the traditional funds, but just deal by deal. So clients get to choose private equity deals the same way they get to choose like an Apple or a Google. So that makes us quite unique as well. And we have a very strong advisory team as well. And again, advisory team is kind of where the secret sauce is at in terms of like, that's what bankers need, that what clients want is advice, to be being told, hey, you're taking the right decision. How do you move away from, the more traditional advisory business, like, hey, let's buy Apple over Google, or maybe sell this bond, sell that bond, but move into more holistic advice, as a client, like, hey, you are 45 years old, you've got this in careers earnings to still go ahead. These are your liabilities, these are your kids, this is what's kind of going on. You should, place X amount in a discretionary portfolio in this kind of risk strategy. You should place Y amount in a hedge fund kind of strategy. So like leveraging the advisory part, which traditionally in Asia, and to some extent Switzerland, was more about like which stock or which bond to buy, to actually move that to more holistically, like what do you need as a client? And how do we make you the most money for the risk you can or are willing to take? So that's kind of the future kind of for what I think Lumen holds for me, or like for us in general, is like how to do this better and better and better, and use the technology, the AI tools to help with investment research, investment decision making, but also actively, being quicker at giving client proposals and updates. When things happen in the Middle East, like they did, a couple of months back, I would love to be able to give all our clients an update within 10 minutes saying like, this is your portfolio, this is how you're exposed across everything that you hold. Given your financial plans or like where you want to go, or like, I don't know, you plan to have another kid, we should probably reduce these and these positions in terms of like less equity risk. Let's go more into bonds, or like, let's go more into hedge funds. I think that is, for me, the big vision, being able to holistically and proactively tell clients kind of what to shift, but then let us manage the underlying assets, right? Rather than kind of the traditional advisory business where we ask you if we should buy or sell a stock. And that's kind of the core of kind of where we want to go. Obviously, again, the second part to your question is like, how do we work with partners, and or what do we want to do in-house? For me, in the end, we're an asset manager, like a family office asset manager. Our core capability should not be technology. I think we need to have extremely solid technology to execute on a vision that, we want to have for kind of our business and our clients. But we shouldn't be building everything in-house, because then, we've got to get 30, 40 engineers. So we've had now with AI coding, we might need only 3 or 4. But still, like, there's I think part of stuff we need to have in-house when it comes to client data. It's obviously very sensitive. Also a moat. The more data you have, you can run, that stuff we need to have in-house. The rest, some tools smaller tools you can build ourselves, I think, but like the bigger tools you should do with partners. Again, obviously, as you kind of said, we work with you guys, a few specific tools. I think like you guys have the expertise to run a project like that. Why go through all the pain and make all the mistakes you guys probably made over the last 5-6 years ourselves, if we can use the solutions that you guys provide?
I think that's also the point. I mean, the same as with your clients, the trust you build, that's also the trust, of course, being built with partners. And it's less of, does this partner have the right solution, especially now in agentic AI world, things are moving so fast. So in a few weeks, there's anyway already something new, and we have to learn together. And of course, our experience is having 30 years been in the business of building and implementing solution. For sure, there's certain things we can share. But I'm really admiring your statement of it's truly client first. And that's what it has to be. And probably that's also, to summarize a bit, our conversation is that in private banking, in high touch environment, it's all about the relationship. It's all about the client. Is that fair to say?
For sure, right? Again, like the relationship with that client, that trust is, I think, above everything else. But obviously, in the end, like you're there to kind of offer them a service, right? So that has to be on par with kind of what the industry has to offer when it comes to offering. And I think that's again where banks are losing out. Very back to the very beginning conversation. If as a bank you can't offer all the things that clients want, like that, the relationship only gets you so far until the client then says, "Look, I'm A, moving bank, or B, I'm going to an EAM because actually, they can offer me kind of everything that a bank can't."
And maybe also just the simple fact that I feel that when I sit opposite to you, that I truly matter to you. Because you're an entrepreneur, it's your business. Same as I always say, we're both too small to fail. Yeah. It's extensive, of course, big business you've built over time. If you have a big brand, one of the biggest banks, and I won't name them, then you may hide under that. And of course, under the excuse of it's all about compliance and I can't simply do it, which to some element might be true. And then it's getting more difficult to serve the client in his best interest.
Yeah, and I think for us, kind of every client matters, right? And all the bankers that we have, they're independent, right? So all their clients matter to them, same as they would at a bank. But then at the the group and the board level, like every client matters to us. As you said, we're quite small, like decent size for an EAM, but like versus the bank's obviously tiny. Yeah. So I think it matters. There's less hierarchy, there's less layers. If somebody's unhappy, for it to get to the board or to get to the CEO, it is one or two layers, right? And we can take decisions fast. So I think that's kind of what bankers also enjoy about being at an EAM, all that flexibility. And if something's not going well, you talk to the CEO and then they can take the decision straight away.
Yeah, exactly. So maybe the last question then on that. I mean, we discussed before that the industry has been growing heavily. When I came to Asia almost 15 years ago, family offices business was still very small. Of course, wealth management in general grows. So with this, actually the percentage of assets under your management, the family, multifamily office, external asset manager business versus assets managed under the big private banks is still a small percentage, right? So why do you think that is? And do you think now with also AI and the probably possibility to scale faster, do you think that will change?
Hopefully it will change. But I think, look, being or moving to an EAM as a banker is a very entrepreneurial move.
Yeah.
Right? Because again, you might get a small base salary, but it's mainly about revenue you generate. So if you look at all the bankers out there working with banks, there's only a small percentage that have that drive. A lot of them want the corporate job, need the corporate job, or need that, fixed payroll.
Yeah.
I think as more and more EAMs emerge in Asia, same as we saw in Switzerland, more and more bankers will see that, it is possible to take that step. My friend did it and he was successful, and you need to see to there. So I do think we'll grow. We'll grow fast, but I'm not sure if we will be able to get a similar percentage penetration that we can in, for example, Switzerland. And it's mainly a little bit also around, especially Asian clients not being very willing to pay fees. So again, same as traditionally in Switzerland, when this industry started maybe 25, 30 years ago, when the banker moved out from the bank just decided to look, half the revenue we generate, we just share with you as the asset manager. Right? So we have half the workload per se, because we don't have to look after the client. You don't have all the fixed overhead, so we just split 50-50. That's a model obviously that came over to Asia as well. What happened obviously in Europe with all the regulations around MiFID II, most countries can't take that fee splitting agreement anymore, so you have to charge the client directly. Again, Europe, that's very much the norm. It's very, very well known. I think in Asia, that's not the case, right? There's very few Asian clients that want to pay a fee. I think that's still one thing that's actually hindering EMs of becoming something more special to, or more prestige maybe towards the client, right? Because again, I always think like if you're not paying for anything, it's not worth anything. It's as simple as that.
No.
So if you as a banker move out from a bank with your clients and just tell the clients, look, it's not going to cost you anything, it's free. What value add is there really to the client?
Exactly.
Like, okay, like I was with the bank, now it's just a relationship, right? So you're just purely playing the relationship game, which is again 80% of what banking in the end is. For me, it's very much about the relationship's great, but let's offer them something they don't get in the banks, and for that you need to pay. You want access to our discretionary management, you want access to private equity, hedge funds, all these things that we do, you need to pay. Right? And that also kind of, for me, creates value, right? When a client sees kind of, yes, I'm paying, but like kind of everything is getting for it. I think that is what the Asian industry still needs for us to get like a bigger percentage share of the market than we do by just doing kind of what we're doing at the moment.
So for me, sometimes comparing to a tailored suit, right? So I can text through WhatsApp my tailor in Bangkok anytime. He knows me. Meanwhile, he knows exactly what I want besides the red collar, and will then advise me in the right way and tell me what I really want. And of course, it's then tailored in exact ways. And that's the same with investment. Of course, if you just want to buy a standard clothing with just a meta stock, then it's simple. They can actually do it through food or interactive brokers, but of course it needs to be more tailored, and that's very common. I think very, very interesting. I would love to spend more time, but we are on time, maybe in the next conversation if you allow. But it's been very interesting. So last question, where can people find you, and if there's anything else you want to share?
No, you can obviously find me in Singapore, as we said, usually around the CBD, so Capita Green, that's where our office is, or obviously our website, the Aument Capital. Feel free to reach out if there's anything of interest to you. If you just want to hear more about the EM space, happy to kind of chat. And, when anything to add is obviously like, tell the bankers, like it's time to move out from the banks. Come join us there.
They will reach out for sure. Thank you so much, Dominic, once again. Of course, you find us on social media, YouTube, Spotify, and the likes. And with this, once again, thank you, and it's been a pleasure.
Thank you for having me. It's been a pleasure.